Christian Financial. Thank you so much for watching our podcast, Real Estate Insider, where America goes for funding your direct nationwide commercial, residential, and private lender. Give us a call or text our office, 832-431-6331. It's where America goes for funding. Today we're talking about the difference between non-QM loans and conventional loans. I want to break it down because one of the biggest things that's happening right now with lending is the evaporation of standard conventional lending, and more private lenders are coming to the market, hundreds of billions of dollars of capital flooding the market for private mortgages. So you're seeing a lot of these conventional loans kind of going away, withering away, and more private loans kind of stepping in to replace that. So we're going to break that down today so you guys can have an understanding between what's the difference between a non-QM, which is a non-qualified mortgage, and a conventional mortgage. So we're going to break that apart. Hey, what's up, Brian? Nice to see you, man. Thank you so much for watching the channel. So we'll kind of go through that so you guys can see the difference and when would you want to use it, when would you not. So let's first start with conventional loan. So a conventional loan you can think of as a bank loan. You go to the bank, you put 20% down, you have excellent credit. You have to verify your income for the last 2 years. You can't have any gaps of employment, any undocumented income, and your debt to income ratio has to meet certain thresholds. Usually your housing payment has to be 31% or less than your income. So that means that your payment on your house cannot exceed 31% of your income. And then your total debts, when you add all your debts on your credit report, excluding food and cost of living, should not exceed 43%. Okay? And so it all sounds good. It all sounds good on paper, but the problem is a lot of people, they don't fit on that box in order to qualify for a loan. And so what's happened is that millions of people have, been declined, denied for a mortgage because they don't fit that bill. A lot of people don't have a salary or hourly W-2 job only. And so people that are on commissions, people that are on variable pay, people that are self-employed, have missed the boat, the opportunity to be able to own a home or buy real estate in America because they don't meet the bank's requirements, okay? So what's happened in the last, let's just say 10 years is, obviously entrepreneurs, investors have realized an opportunity, a gap with financing in America. They've created a non-qualified mortgage, and it basically is more of a flexible, creative alternative finance to be able to help people to be able to purchase rental properties, primary residence, investment homes, second homes, and using various different types of underwriting methods to qualify for the loan, such as using bank statements to qualify. You can actually qualify with your bank statements instead of using tax returns or W-2s or pay stubs. You can use the cash flow of the property to qualify for the loan. You can use the 1099. You can use a profit and loss statement. So there's so many different things that you can use your assets to qualify. So there's a different way of looking at it, more of a common sense approach. You can use variable pay. If you get paid, if you're a truck driver, you get paid by the load, you get paid by the mile. You're an Uber driver. That's, so it's basically more, and the other thing is that with a conventional loan, they're using software to qualify you for the loan, whereas a non-QM loan is reviewed by an actual person, a human being, and it's called a manual underwrite, where the actual underwriters underwriting the loan, and they can make exceptions. There's more flexible requirements to get you approved. And so, and initially when private loans came out, the interest rates were higher. But what's happened in the last 5 years is that the interest rates on private loans have actually come down, and they're getting almost close, very close to the conventional mortgage rates. So, and I believe what's going to end up happening here in the next 20 years is that conventional is kind of, delineate and go away, and private lending is going to emerge and probably take over conventional lending because of the way that people get paid today, because of the various, situations that are going on right now with the political environment. So it's a huge opportunity for people. The reason I'm sharing this with you, because we're the #1 non-QM private lender in America. And we want to be in front of that opportunity to help you guys out there. You know, the other thing that's, I think, very powerful in regards to the investment properties and doing DSCR loans. So when you're talking about doing a conventional loan and closing with investment properties, you cannot close in your LLC. You have to verify your personal income, your personal financials, and you're limited to a total of 10 properties. But see, with non-QM, there's no maximum on the amount of properties that you can own, number one. You don't even have to have a job or employment with a non-QM DSCR loan, okay? Number three, you can close an LLC, which is also very powerful, because you don't want to have that report to your personal credit if you're an investor. You want to shield yourself from liability. And so all of this falls under the non-qualified mortgage. Okay, so this changed in 2008 after Dodd-Frank was enacted, and it's basically an abundant, in my opinion, it's created an abundant opportunity for people like you and I to scale and flourish and tap into, seize and monetize this opportunity. Hey, what's up, Salute? Hey, Mr. Layback, how are you? So it's an opportunity for you guys out there to kind of cash in, okay? And so that's really the big thing here, is breaking down the difference so you guys can see and understand. And you know, a lot of people, the argument that we get is that, well, we don't want to pay a higher rate. The rates are 0.5% difference between conventional and non-QM right now. That's how close they are. But the speed of transaction, the ease to get the loan done, is about 60% less documents needed for a non-QM loan versus a conventional loan. And you can close about 2 weeks faster. So just think about that. You can close 2 weeks faster, okay? 60% less requirements for a DSCR loan, okay? So these are very powerful things if you stop and think about it, because you need speed to marketplace, access to capital. You do not want to wait to be able to get funding, okay? Now, I'm not trying to talk you out of conventional loans. We offer conventional, but I'm basically putting it out there as a practical to analyze and evaluate to see what makes more sense, right? So, you know, it's entirely up to you on what you want to do, whether it's conventional, non-QM. I'm here as an instrument to educate you, get you the information so you can see what program that you want. Or you might be fine with doing conventional, maybe for your first, you know, rental properties or whatever, and that might be okay. But at some point, if you're going to break out and add a lot of properties, you know, you're going to have 20, 30, 40, 50 units. You will not be able to do conventional any longer. You know, and then the other thing is that if you are, you know, depending on how you earn your income, you may not qualify for a conventional loan. So these are some things to think about when comparing conventional to non-QM. The other thing is that if you're self-employed, it could be extremely difficult for you to get a loan with a conventional mortgage, even a jumbo mortgage, because of the way that they calculate income. Because remember, what they're looking at on a primary residence is the ability to repay. So you have to document the ability to repay in some way. And on a conventional or jumbo loan, they use tax returns or W-2s, that's it. You can't use bank statements to show the ability to repay. You cannot show a 1099. You cannot show a P&L. So it makes it very narrow and difficult to qualify for that type of loan versus on a non-QM loan. And a non-QM doesn't mean it's not a bad word. It's not a bad thing. It's not taboo. It's perfectly fine. It just means it's a different type of loan for certain people. And now that certain people is increasingly becoming a lot of the Americans in the United States because of, again, the way people are paid, the type of transactions that are occurring, the type of real estate that's available in the market, the political environment, inflation. All of these things are coming to play a role on why private lending is emerging. And so, and I think it's going to get bigger and bigger as time passes. Now, there are different requirements. Oh, thank you. Thank you so much. There are different requirements for each program. So I want to talk about that quickly because I think that also is something that's very important because we talked about the differences between non-QM and then conventional, but now let's talk about some of the requirements. So first off, remember we're a direct lender. We lend nationwide on all these products, conventional and then also non-QM. But the biggest requirements are, for example, let's start with conventional. You normally have to have A credit. Now I know that conventional, Fannie Mae, Freddie Mac, they publish that you can go down to a 620 credit score. I'm going to tell you right now that it's going to be very difficult for you to get approved for a conventional with a 620 credit score. More realistically, you're probably going to need like a 700 or higher to qualify for a conventional loan, okay? The maximum debt ratio that you can have is 43%, maybe 50 if you put in a large down payment or you have 850 or higher credit score, okay? So maximum debt ratio, this thing is 43%, 700 plus higher credit score. You need full documentation only. So you can only show tax returns or W-2s to qualify with a conventional loan. All right, you also need to have usually at least 3 months or more of reserves, no bankruptcy in the last 4 years, no foreclosure in the last 7 years. And you cannot close in a company name or LLC or corporation. You have to close in your personal name. So those are the requirements. Now you obviously get access to the lowest rates. If you're putting less than 20% down, you normally have to pay mortgage insurance, but you're getting the lowest interest rates that are available in the market. And that's good, that's a good thing. So that's the trade-off is if you're fully documented and you have everything, you normally have to be a US citizen, okay? So those are the main requirements. There's loan limits. The loan limit for conventional ranges between 750 to $1 million, depending on where you're at in the country. And then, so non-QM is completely different. It's way different. So you could have no credit score, B credit, C credit, D credit. You can do asset-based. As far as verifying your income, you can use the cash flow of the actual property. You can use your bank statements. You can use your 1099. You can use your pay slips if you're a truck driver by the load. If you're Uber, Dash, DoorDash, whatever you do, all these things that people get paid now online, you get like a pay deposit. You can use that. You can use your Venmo, Cash App payments. Okay, you can use crypto. Okay, let's not forget about how big cryptocurrency is right now and how a lot of people are making their money. You can never use that on a conventional loan, right? So you can use all those pay requirements, and it can be for primary home, investment, second home. You can close in your LLC. Okay, you can close in your personal name. And then the type of property, single family, multifamily, all of that's fine. So, and then as far as the limits, there really is no limit. There is a minimum of 100,000 purchase price. The maximum is usually up to 10 million. All right, maximum is usually up to 10 million. So those are the trade-offs, the requirements between conventional and non-QM, okay? So the biggest difference on the interest rates is the non-QM interest rates right now are about 0.5% higher, all right? And then I know I just saw a question about what's the catch. There is no catch. The big thing to note is that these loans are not, so you can't, the biggest difference between conventional and non-QM on the rate side is that the non-QM interest rates are slightly higher. The other thing is that there is no down payment assistance or zero down with non-QM. You have to have at least 10% equity if you're buying a property, a minimum of 10% down. There is no 100% financing with non-QM. With DSCR loans, you have to have at least 15% down. So a rental property is at least 15% down. If you're purchasing, minimum 10% down. If you're refinancing, they'll go up to 80 to 85% for primary residence. For a rental property, they'll go up to 75 to 80%. Okay, so you get less leverage and a slightly higher rate, but again, 60% less processing time, and then you know, that's a huge thing already. So 60% less processing time, so you can save up to 2 weeks on the closing time frame, and less documentation needed from you to close. All right. And then there is the minimum of $100,000 loan amount. The maximum is 10 million. So big difference with conventional. The minimum with conventional is 50,000, but the maximum is usually $1 million with conventional. So there are some pretty big differences on the loan amounts. And then, like I said, with the credit, you know, with the non-QM, the credit is all over the place what you can do. And then how you can document the income, I think, is also very powerful. So, like I said, I mean, we offer both of them, and we can help you with either one, whether you want to do conventional or non-QM. It's entirely up to you. The purpose of this is just to give you the information, so that way you're aware of, you know, what's out there. Because a lot of people, they think, oh, they go to their bank. The banks don't offer non-QM loans. So they go to their bank, they get denied for whatever reason, or they told, hey, this is all you can get, and they don't know what else is out there. That's why we put this out on the web, so you guys can get the knowledge, get the information, so you know what's out there, what's available. So there's other programs. It's not just what your bank tells you or your local loan officer. There's other products out there that can change the world, and they are. And that's why we're here, you know, educating you, giving you the information, so that way, hey, if this is your situation, maybe your friend, maybe a family member meets this situation, we're here to help you to make it happen and get it done, right? So if we can help you in any way to add value, you know, don't be a stranger. Please reach out to us. Call or text my office. We're here for you. We're open 7 days a week, all right? You can reach us at 832-431-6331. You can also, we have all of our links down below. All of our links are down below. You can get our website, the YouTube, the Facebook, the Instagram. Our website is officialangelochristian.com. And then if you want to enroll, the other thing that's really cool about our company, there's no cost for enrollment. You don't pay any fees. There's no hard credit check. There's no contract. So you can click on the link, and then one of our lenders will give you a call within 24 hours to go over your situation, to assess it, to look at what's going to be the best program for you, to help you to get pre-approved, and then take it from there to get you your pre-approval letter. We also do the realty as well. So if you need help with a realtor, we can connect you with one of our realtor partners to help you to find a home, whether you're trying to purchase. Obviously, we do a ton of refinancing. If you want to pull cash out, we have so many different products to be able to help you. So don't be a stranger. Reach out to us. And don't forget, if you want to join our loan partner program and get paid for your referrals, if you want to become a loan partner, send us an email to loans@officialangelochristian.com. You can sign up to become a loan partner, or if you want to join our real estate university, become a top producing lender, you can check out realestateuniversityonline.com. All the links are down below to get signed up with Angelo Christian. So we really appreciate all of you guys watching us. And if you want to get hooked up with Angelo Christian with our Google, all of our vendors and our partners, that if you leave a happy review, if we've done business with you, we'll give you a free Amazon gift card if you go to our Angelo Christian Mortgage on Google, and then we'll hook you up with that Amazon gift card. So I appreciate all of you guys tuning in tonight, giving us a big thumbs up. Please share this information with any friends, colleagues, family members. If we can help you in any way to add value, call or text my office, 832-431-6331. It's where America goes for funding. Everyone, have a great weekend. We'll see you guys back again next week. Take care and peace out. Stay strong.